Wednesday, August 9th, market analysis. Stan Ehrlich, good morning. I'm doing this very early this morning. I have some appointments later. 8:41 a.m. California time. Usually I do this an hour later. We have a new low, probable new low close for some of the stock market indexes as we come down a little bit further. And you guys know I start out with the indexes and typically the spider, and here we go, SPY. We have that gap to close still at 443, almost exactly. Now the DIA and the QQQ have closed their gaps extremely accurately yesterday, and we'll take a look at those in a moment. But the spider has still to close its gap. Yesterday, the low was almost at the top of the gap, and we need to get down to 443 or maybe a little bit lower in order to close that gap. Now, the gap's 443, period. But I'm not so sure it's going to stop there. I think there's a very good chance that we could come down to, say, 440, test the major bull trend line in an area of previous trading range or support and turn back up. Now, there's also the chance of it being 437, and maybe, this is a little bit further than I'm expecting at the moment, 432. I do not expect the gap that's way down here at 422, 23 area to be closed. I think that's not going to happen. Now, maybe in the October lows might get weak enough to come down and close the gap at 423, yeah. But I'm not going to talk about it much until I think there's a chance of doing that. So for the moment, my first shot is 443 flat, the gap closure for the spider, and then turn back up and rally into new high ground completely. Remember that we do not have far to go to the minimum upside objective on the head and shoulder bottom that started forming in June of last summer, and the head and shoulder bottom finished forming and started the bull market somewhere around March, April of this year. The objective is 476.80. Our recent high was basically 460, and we don't have that much more to go above the highs we saw a couple of weeks ago in order to reach that minimum upside objective, which is basically historic, all-time historic highs, which is what I've been talking about for a year now. So coming into October, there's expected to be not as profoundly and as fantastically and as perfectly as last year. I don't really think that's going to happen again, but I do expect some kind of a buying opportunity in October, and it usually is a 1 or 2 month decline. So that's August, September, and we're already in August. So maybe we saw a high a couple of weeks ago that will lead us a little lower than I think into the October lows and then up. We'll see what happens. Having said that, I think there's going to be one more high before it starts coming down into the October lows. Okay, now enough said about the spider, the DIA. Basically the same rhythm and consequences as far as gaps are closed, expectations and so on. The gap was closed yesterday and also in the Qs perfectly. Ended up closing on strength into the high, but I don't think this dip is over just because the gap was closed, although that's totally what I was expecting, forecasting, and it's now happened. So now what? I think, as I've said before, we're going to go down a little bit more. My best shot here on the DIA is going to be at 346, and we're 51.5 at the moment. So 5.5 points or so lower to support, and then into new high ground. Yeah, that's my first shot. So Qs also yesterday closed the gap almost perfectly. And we are now already, so the Qs are weaker than the DIA and the Spider. We are already lower than yesterday's lows on the Qs, already under where the gap is or was. It did the job yesterday. And we are below a relatively decent bull trend line, not the most important one, which is way down around 346, 345 at the moment. Remember, every day it goes up a little. So the next shot, as far as good support is concerned on the Qs, that looks likely in the next few days, while Spider closes its gap, DIA dips down to support. I'm thinking we could come down in the area of 361, and it's only 6.5 points away from where we are right now, and we're down 4.25 at the moment. And I'm not implying it's going to happen today. We're also getting closer and closer to oversold, so keep your eye on the RSI as well. So if we're at support in the day or two, close to the end of the week, maybe today's Wednesday, and oversold and support, that's when I'm going to start looking at the likelihood of it turning back up again. If we glance at the Russell, we see that we are quickly approaching support. We are likely to have a new low closing price, and we are also very close to a new low like the QQQs have just done. So right behind the Qs as far as this weakness is concerned are the Russell 2000. And it's got plenty of various support areas on the way down. I do not expect this gap at 177-ish to be closed. I expect the market to bottom out for the Russell 2000 somewhere in the neighborhood of 189 to maybe several points lower than that. Now let's look at the futures. We got some very good stuff going on here. First of all, I want to talk about that 88-day cycle in the bonds. It's performed unbelievably well for the last 6 88-day cycles. The last one worked great for a couple of weeks. Now we've seen a break back down into a support area. The previous lows that were made back in October, November last year. We had a bullish engulfing, perfect, at support, in oversold conditions. My favorite combination. Came down, picked off the bid for ER3 almost to the exact tick. I think we were at 1 or 2 ticks below the exact bid price. So we bought the low of the day for all practical purposes 2 days ago on Monday. Yes, and it closed with a small profit. Yesterday, it made more money. Today, it is currently higher on the day, making more money. We are almost higher than yesterday's high. What I want is for this market to go up until approximately the middle of next week, where we are expecting on the 16th of August a short-term cycle high. The last time it was a little bit early, not quite in the middle of the window of opportunity, the red bar at the top here, around April 11, but it happened. It was a little bit late the previous time, but it happened. It was almost exactly on time the previous time, about the end of July of last year, and a bearish engulfing occurred. This cycle is really very, very good so far. Not that it will stay that way forever. They usually don't. But they're extremely good tools to set up expectations, but you don't want to get married to the expectation. So let's see how this pans out around the middle of next week. Looking for a rally high, probably in the ballpark at 125.5 maybe. Not too far away from here. We're almost 23 right now. And then turn down a little bit. Next chart. We're looking at 10-year notes. Bullish engulfing 2 days ago. Unfortunately, we missed the bid on the ER3. It didn't quite get low enough to get caught like bonds was dead perfect. But ER1 is always long whenever you see a green vertical bar, price action bar, because we have an ER buy signal. ER1 always gets in when you get green on the long side, or if you see red, like at this high right here, we're always short. And we always have a protective stop entered immediately, automatically, with the strategy, no ifs, ands, or buts. Next chart. So I'm bullish on interest rate futures, no doubt, into approximately the middle of next week. We'll see what happens. Crude oil is getting stronger, has gotten stronger than I expected. We are now up to and a little bit above previous highs, going all the way back to December of last year. This could be, but I don't think it's going to be, a major bullish breakout, but that's only if it stays up where it is right now, and probably another 1 or 2 more days, like the end of this week, at 83.90-ish and higher. That would constitute a major bullish breakout. Now, we just saw a couple of days ago overbought conditions. We saw a bearish engulfing that did not work, but sometimes they're part of topping and bottoming out formations. So we might have another bearish engulfing coming up any old moment. I'm looking for the market to turn down. I don't think it's going to stay here, but I can't rule it out. There's a possible bullish breakout, but again, I need a little bit more time and some steady price action, because if this thing fails to close above previous highs that were back in April, that's probably the beginning of the next break. Next chart. Heating oil. Almost the exact same comments. Currently overbought. Looking for it to turn down. This rally is not expected. I thought we would be turning down yesterday at resistance, but it popped through it. So I'm looking for new short sell signals, and we got prime situations for those to occur. We're coming very close to that resistance line, the previous high back in January. So watch out. If you're long, tighten your stops up, lighten up on your trade maybe, take some partial profits. Watch very carefully and very closely for new short sale signals. Next chart, natural gas. Same comment completely. Next, gold. We had the top of the market pegged to the exact day about 3 weeks ago, red bearish engulfing on the high, and that was July 20th. We had another bearish engulfing on July 27th, and today, again, we have a new low for the move down, likely new low close for the move down, but I'm warning you, we're getting extremely close to oversold, and we're getting right into a support level, the lows in late June. This is a prime situation for it to rally a little. So I wouldn't be selling short here, that's for damn sure. I'd be looking to potentially take some short-term profits on my shorts. So I'm looking for a very small rally if it can do it, and definitely soon, and maybe very soon, new lows for the year. Next. Whoop, didn't want to do that. Sorry about that. And let's go to silver. Here we go. We pegged the top of the market for silver also with an ER sell signal. And today is the second day that we are actually oversold, and we are very close to previous lows. Come on, you are in an area of support. I am looking for, because we're oversold, also the beginning of a little rally to start. But if you're short, all I suggest is tightening stops, or maybe taking partial profits, lightening up a little bit. Next chart, platinum. Unfortunately, we didn't have a sell signal at the top of the rally, but I did comment about the trend line being tested and the overbought conditions and the likelihood of it turning down. But here we have the move. It's already happened. We're now at support, challenging the lows for the year, and oversold also. Prime situation for a bounce. We might even be right around the low ticks right now. A little too soon to tell, I would expect. But that's the way it looks when it starts. So I have to say what I have to say. Oversold conditions, second day in a row at previous lows. If you're short, lower your stops, take partial profits, watch for buy signals. Next chart, high-grade copper. We got the rally high a week ago. Perfect, that's great. But I'm not oversold yet, and we're not quite at support areas yet. Looking for lower prices. Next, soybeans. We got almost the high of the market on soybeans. Yesterday was the lowest low for the move. I talked about yesterday and the day before being oversold in a support area. Doesn't it sound like a broken record? And we are starting to rally, exactly what I was talking about yesterday. Now, momentarily, we're just barely above the low of the day. And for all practical purposes, up 3 cents, you're real close to unchanged. But it is up a little bit. We do have a higher high than yesterday, and I think we're going to rally more. Now, from a technical analysis perspective, we had a major top March, April, May, June, July of 20. So, or yeah, 2022, is that it? Yeah, 22. So we broke that. We broke into new high ground, got overbought, had a sell signal, all of us classic stuff, nothing surprising. We came down in the last day or two to that previous support area developed from the highs we saw for the last year plus. Looks like we're bouncing. That normally is a very bullish area to be a buyer. So am I saying that I'm looking for 1410, 1420, 1430? Yeah, that is a possibility, as much as that pains me to say, because I don't like inflation that much. And soybeans are used from everything from plastic to God knows what. So this looks bullish. I can't help it. The other side of the coin is the possibility of a major double top formation over a year's period, actually more than that, but it's a little lopsided. If it's a double top, we have to go down, of course, and break below 1066. We're nowhere near that. And everything looks like it's about to rally a little. So if the rally, which I'm fully expecting, keeps on going up, well, there's your 14, 10, 20, 30, 40, 50, whatever, bull market. So this is a very critical spot. Next, bean oil. Not quite matching everything. Bear trend, lower lows, lower highs. Looks like it'll dip back down a little bit. Not a lot to work with here at the moment, so no comments momentarily. Soybean meal, pretty much the same thing, but we did have a bearish engulfing a few days ago. Didn't work quite right. I'll save more comments for when I get a better handle on what I think is going to happen. Next, corn at support, almost oversold. Very close to my favorite combinations, but not yet. So we might fiddle around here a little and test that support area again, and then that would be at 475. If it can hold and we get some sort of a bullish price action, well, you got yourself a little double bottom at support, and you can get a pretty good rally out of it. But you have to watch carefully to see if it starts closing below these previous lows at 473.5. That's bearish. As long as you're not too close to being oversold or already oversold. Next, wheat. Not oversold, at support. Maybe it'll break down and slide lower. I think that's going to happen sooner or later. Support resistance above the market at around 750 has stopped the rallies twice now, and we're all the way back down to the lows, and the major trend is down. So I'm looking for lower levels. Next, cattle. We got the top of the market a couple of weeks, 3 or 4 weeks ago. The rally was a little bit larger than I expected, and now we should be heading down to new lows for the last month or two below 177. Next, hogs. Same kind of comment. We need to close below 80 in order to have a little bit of a breakout, but the trend is obviously south. So I think it is heading Tierra del Fuego. So next is, okay, come on. Our orange juice. Whopper of an overbought condition. Huge. And a bearish engulfing ER sell signal on the high day. That's why I built this automated trading system, ER signals. I'm looking for lower lows. I'm looking for a test of 290, which we've already come close to, but not quite. We're not overbought, oversold. We're very neutral on the RSI. So there is more downside potential to a bull trend line into support. And I think the realistic potential objective is about 275. Next, cocoa. Wow, what a bearish engulfing on the high day. Day before yesterday, and yesterday, kaboom. Hey, in 2 days, the cocoa market went from overbought conditions to oversold conditions. You do not see that happen very often. Rare, very rare to happen very fast like that. Probably too fast. So we have an inside doji today so far, a little tiny bit lower. I think there's a very good chance it could goof around, slip sideways for a little bit. But I think yesterday, day before yesterday's bearish engulfing ER sell signal could be a major long-term top. Next, cotton. We got the top again. About 2 weeks ago, bearish engulfing at resistance, my favorite combinations. Love to see that combo. Support and resistance area is important to me. Overbought and oversold conditions at the same time are also important. And if we can get a bullish or bearish engulfing, wow, you got very high odds that you've got a turning point. And lastly, we're back to sugar and then coffee. So I'm looking for lower levels on sugar. Frankly, I think it's going to get down to 20. May take a little while. Nothing happening super fast here. And lastly, coffee, same kind of thing. I think we're going to easily come down and test the support area at 155, and we'll see what happens after that. Thank you very much. The E-mini is now making new lows for the day and for the last few weeks after sell signals on the top of the market. Got the high day there. You guys have a great day. Bye-bye.